All right, today is the 16th of August, 2021. Today's Monday. U.S. consumer confidence dives to decade low. All right. So this is really incredible because we were expecting the U.S. consumer confidence to go up. All right, at least to some people. But for us, it's all right. On our side, we kind of believe that, right, the inflation problem will definitely hit the market. And truth be told, it really happened. Of course, the thing is that we did not expect it to be that low, honestly. We know that it might go lower, but not that low. And apparently, it's actually happening right now. All right, so the thing is this, the US consumer sentiment actually plunged to decade low. So the last time we see this figure was in 2011. Right, 2011 at 70.2. Now, you can see from the chart over here on the left side, you can see that since 2011, that's when we walk out from Lehman crisis, all the way, it was pretty good until 2018 to 2019. As a matter of fact itself, the US confidence level was so high in 2019 before the pandemic happened back in 2020. Now, the crazy part is this. Back then, when it was at 2019, the high, the consumer confidence was at high, the stock market was at about 30,000. But today, we are now at 35,000, but yet the US consumer confidence is at the lower end. So what is happening right now? This is a big problem that traders are getting worried. And that's the reason why we are having a lot of questions being asked in the market. All right, I see that there are more people coming in. So I'll be turning on my screen. Give me a minute. Just give me a moment. It's pretty cool to do this live. Let's take some pictures later. Okay. Okay. All right. So what will it cost? Well, there's many things that can lead to this thing here moving forward, right? So later on, I will share with you what could be the problem and what can we do to protect ourselves. All right. Just give me a moment. Okay. All right. So first of all, you can see on this cartoon, all right, you can see that it's very cute. Is that you see the bear inflation looking at the US consumers, and of course, inflation will eat up the people in terms of monetary costs. And of course, inflation is here to stay. Inflation seems to be here to stay, and this will always worry people. So this cartoon is what they're trying to express the thoughts of the cartoonist to tell you that about inflation. But before we go on to more deeper stuff, let's just make sure that disclaimer as usual. Make sure that you understand that you may lose money in any financial investment and trading, and you have to carefully consider such activity is suitable for you. All right. If you accepted the above, you indemnified me. Okay. Now, quote of the day is, it's okay to be wrong, but it's unforgivable to stay wrong. I think it's a very good word itself. All right. Sometimes we can be wrong in the market because when the market is not ready or we got it actually wrong. But if you actually continue to make the wrong mistake all the way, then it's unforgivable. And I totally agree with that. So with this understanding here itself, let's see what can we do with the market. Now, because we will only do the charting at 9:10, so we continue to proceed with the fundamentals first, okay? All right, so what we have for this week, excuse me. Now, for this week, we have and on Tuesday, we have the core retail sales and we have the retail sales month on month. Okay, and you can see that retail sales hasn't been too optimistic. We have practically most of the time around 1 to 2%. Now, occasionally it's all right, we have about 8 to 10%, but it doesn't really show the consistent there. So I kind of believe that if the consumer confidence is down because of inflation, then I am pretty sure tomorrow retail sales should be lower. I suspect that tomorrow retail sales should be lower. And we can look at the Dow Jones, and you can see what happened on Dow Jones on Friday. The Dow Jones initially went up first to 35,600, new all-time high, and then it closes kind of flat throughout the whole day in the later part. Now, the S&P 500 managed to green out another record week. All right. Okay, so let's take a look what happened. You can see that the Dow was up by 15 points, S&P up by 0.16%, and the NASDAQ just slightly uptick. So what happened was because share of Disney jumped by 1% after it reported a blowout physical third quarter earning. Now, of course, the share price gap up quite a fair bit, then there were profit taking. Then the rest itself is talking about these cyclical counters are doing okay. But primary focus was that the volume was pretty low for this week as we're entering the summer holiday. And of course, during summer holiday, usually the market will go a bit slow and before they come back in September. So that's the reason why traditionally in August, the market is kind of slow or if not sideways, okay? And FYI now, right, 92.9%. 92.9% of the earnings are all above expectation, all right? But the stock market itself, right, doesn't really seem to show the same way. It seems that the earnings itself, right, although beat expectation, but the forward expectation, which means the next quarter 3, they are not comfortable with it. And that's the reason why some counters are actually off the highs. And I just saw the message from Benedict, stimulus checks has already stopped for now. So likely retail sales likely be down. I totally agree with you. In fact, more than half of the states now have already stopped their retail of the stimulus checks. So I do suspect that will happen. And of course, I repeat, the only way to get people back to work is to stop the money giving and also the stock market. So I kind of believe that this could actually present a good chance that the stock market may actually take profit because of this reason. So let's just revisit what happened on Friday. You can see last Friday, we saw a very interesting movement. We saw that the Dow Jones opening price was between the two pivots and the KSI was green. So by right, we should have an upside market. So easily itself, right, if the market stays above OP, it will go to KTR +1 because the KSI is green. That's something that we can actually take note. And because the market did not break P2, so you shouldn't be doing any more selling. And if you look at it itself, right, on Friday, once the market opened, the market hardly even touched the KTR +1 or even KTR -1. So in short itself, right, when you see a market performing like this, we know that this is likely a doji day, which it happens. So which means that today, we should be very careful because normally a doji formation the next day, which is today, it could be a directional day. It could be a directional day. So traders, you need to watch already. Now, for gold was something different. Now, gold, we have an inverted pivot, inverse pivot, okay, whereby the pivot 2 is above pivot 1. And we already mentioned this before. Now, if the market stays below the pivot 2, there is a downside potential because the KSI was red. But if the market goes above pivot 2, it becomes a classic trade. And above OP, above pivot 2, in this case, will be a buy. But of course, in general speaking, we expect with the KSI red, we do see usually it will not close at the high. But interestingly, it actually happened. Why? Because you notice this again, the day before was a doji day. So we have said this many times. When you see a doji day, the next day to see a directional day, seemingly pretty possible. And when it's directional day, which means usually it will close near the high or close near the low, depending on the direction of the market. And obviously, it has done it again. So that's why some people, when they traded the gold on last Friday, they used the Fibonacci level at 1757 level. We have already mentioned before that is not correct because 1757 is actually above 1755. And based on our rule, above OP, above P2 in this case, is a classical buy. You shouldn't be shorting at 1757. But of course, if you're not using TWB system, I'm not here to tell you more than that, okay? So we can see very clearly now, if you actually practice what you learned, then you know that above OP, above pivot 2, in this case, CCRY, if you just buy, you wouldn't have lost a single cent. And in fact, you would have made all 5 trades, 5 out of 5. Can you see that? Right, you would have made 5 out of 5. You would have made all of them 5 out of 5 CCRY, 5 out of 5 all profit. Okay, so guys, are we clear with this? If you are clear with this, please key the word clear, C-L-E-A-R. All right, so it's very important that y'all do not use external indicators or charts, because if you are a TWB student and you use external and after that you come and ask me what to do with the market, it's going to be very difficult for me to explain to you because it will basically have, it will contravene the interest here. That's the reason why we show you conventional chart, but we explain to you more in details so that you can check and balance yourself, okay? So this is actually very, very important. So I received a few messages from people who actually shorted gold at 1757, and I told them that likely if the market is to go up further, we could see further upside today. And already this morning we saw gold tapping 1780 already. So let's see what will happen later on. All right, so that is the recap of what happened to Dow Jones and the gold market this morning. All right, so now we're going to go into the news. Okay, the news side itself this morning, we have a few big events. Now, US moved to Afghanistan embassy compound to the airport as Taliban insurgents arrive in Kabul. All right, so this is something incredible. Now, 1 month ago, when Joe Biden, the president, US President Joe Biden, was being asked a question whether will Taliban ever take over, and come in, right? He was so confident. He said that no way. We have 300,000 Afghanistan troops over there. They're all well trained and stuff like that. And apparently now, US forces now is forced to evacuate diplomatic personnel by military helicopter from the embassy compound. This is something like what happened in Vietnam back then, okay? So now people giving a lot of stress to Joe Biden, all right? I'll show you some pictures here as well. You can see that the Taliban soldiers now are all on their vehicles and they're all around. So these are the pictures from that. And it's just the most recent, it's 15th of August picture, not the long time ago. And of course, there's a lot of videos ongoing now that the Taliban soldiers actually continue to gain ground in Afghanistan. So what is happening right now? Could this be the catalyst that bring the market down? Could this be the turning point? We don't know, right? But we can see from many videos that this is what happened, what this Joe Biden say on 8th of July. So maybe you turn on your volume to listen to this. Okay, I'll try to do it for you. If not, the video copy is already uploaded to our TWB Any Under Sun group. Okay, let's hear it out. Okay, so.
Is the Taliban takeover of Afghanistan now inevitable? No, it's not. Because you have the Afghan troops at 300,000, well equipped as any army in the world, and an Air Force, against something like 75,000 Taliban. It is not enough.
Mr. President, thank you. Your own intelligence community has assessed that the Afghan government will likely collapse.
That is not true.
Can you please clarify what they told you about whether that will happen?
Not true.
So what is the level of confidence that they have that it will not collapse?
The Afghan government, which has to come together, clearly have the capacity to sustain the government.
Any parallels to this withdrawal and what happened in Vietnam with some people feeling?
None whatsoever. Zero. What you had is that entire brigades breaking through the gates of our embassy. 6, if I'm not mistaken. The Taliban is not the South and the North Vietnamese army. They're not remotely competent in terms of capability. There's no circumstance we've seen people being lifted off the roof of an embassy in the United States from Afghanistan. It is not at all comfortable. So the question now is, where do they go from here? That the jury is still out. The likelihood is going to be the Taliban overrunning everything and owning the country from Saudi Arabia.
So you can see that sometimes you can't speak too soon, all right? He actually says that, right? He actually said this very statement is that there are going to be no circumstances that you see people being lifted, okay, off the roof of an embassy of the United States from Afghanistan. He said that, okay, on the 8th of July. And the thing is this, what do we see? We see this, okay? Oops, sorry. All right, we see this. Okay, I think that to do some PowerPoint here for a moment now. Let me just give me a moment. Okay. Just give me a short moment. This morning, this is just rush out, so that's why I haven't done the PowerPoint properly yet. Apology on this. Okay. All right, you can see that this is what happened in 1975, whereby US citizens, diplomats, personnel were all offlifted from the roof of the US embassy in Vietnam. All right, and now again in Afghanistan, again, this is happening. So that's why people say that, okay, you just have to be very careful with your words. And of course, now you can see that the US intelligence agency just 4 days ago said that Kabul could only fall in 90 days. But now this figure has revised to 72 hours, aka less than 3 days. So you can see that, right? Someone is going to roll for this, okay? And of course, you can see now the president, Arafat, okay, is actually now leaving. He has already signed an agreement to resign and transfer powers to Taliban. Oh my goodness. So this is really a slap in the face for America. But of course, again, let me say this up front. Whatever happens around the world is, as long as the problem doesn't come from US itself, then seriously, after a while later, the market will still recover. Because first of all, market will never condone terrorism. And always, whenever there's some terrorist attack in any place in the world except USA, usually the market may shake a little bit, but after that, the market will recover because the world do not condone terrorism. So in making sure that, right, if anybody has shorted the market, prior to that, they will usually use money to recover the market. So traders, you need to be very careful with this. Okay, so don't get too into it and say, oh, because of this Taliban thingy, I short the market now. I don't think that's the right way. Unless you are using technique to short the market, then it's fine. If not, please do not engage into that. Okay, this is going to be very dangerous. Okay, clear? All right, so now the other one that shake the market this morning is our neighbor, Malaysia PM, Muhyiddin. All right, he is going to resign today. Okay, apparently itself is confirmed. All right, and that is going to create another big problem because Malaysia now is having a big issue with about 20,000 people suffering from COVID-19 every single day. This is very crazy, and it's also very unclear who will be the next PM. So you can see that he's definitely pretty stressed, but after 17 months in the office, we can see that he kind of not able to control the current situation now in Malaysia. So there are a few potential, which could include Deputy Prime Minister Ismail, all right, then veteran lawmaker Tengku Razaleigh Hamzah, how I get it right, and of course the opposition leader Anwar. Okay, but I kind of think that Anwar chance is very slim in my opinion. Okay, so it is very clear that now, right, Malaysia will likely, the financial market get into turmoil, and of course currently now it's really not in a very favorable position. And I also heard that there are some security issue now in some part of in Malaysia. So all I can say is this, guys, if you have friends and relatives in Malaysia, please check on them, support them if everybody can, financially, morally, mentally, sorry. You just have to do what you need to do for them because this is going to be very tough time for them, especially right now. All right. Okay. All right. So that's what happened. And of course, we did talk about that earlier, the US consumer confidence. All right. Consumer confidence, its sentiment is very bad right now. And that is where it's also causing concern. But you can see a very interesting chart at the same time. While the US consumer confidence is actually going downhill, but look at the stock market. Okay. The stock market, the last few months has no relevance. Okay, you look at it. It doesn't have any difference there. So that's why I say that when the market is kind of like manipulated in this manner, regardless itself, right, the market, you just have to follow the techniques, all right? Do not do any form of shorting the market unless the technique calls for it. This is very important. So what's the reason now to stay bullish in the market? Let's take a look. Now, first of all, you can see that the Euro Stoxx 600 is now outpacing the S&P. My goodness. So now the Euro Stoxx are actually outpacing the S&P 500. But at the same time, we compare this with the Chinese stock market itself, right? We are very far away. So this tells you that, right, where the funds are actually in. And if you look at it right now, right, there is ongoing saying that, right, there is even no worry. So HSBC Chief Investment Officer Xian Chen says that, right, don't worry, even as inflation, so what, the stock market will rally. So this is a very strong statement from this guy. He says that even though the US consumer price inflation is now at a high of 5.4%, but the 10-year yield is declined. So there's nothing to fear by itself. So it seems like a very bullish statement. And he says that, right, even if the S&P is to go higher, there's no worry. Even if inflation is fierce, there's also no worry. In short, he's telling people that there's nothing to be worried about. Okay, this coming from HSBC Chief Investment Officer Xian Chan. So of course, why can he be so confident? Because if you look at this number now, you will understand why. In 1.5 years, the global central bank has pumped in $10 trillion in just 1.5 years. Now, if you give me $10 trillion, it's all right. I'll definitely be able to give you a solid stock market. So look at it. The total now in just 1.5 years, $10 trillion has been pumped into the system. So that's the reason why as long as the pumping continue, the stock market, no matter how, will still continue to go higher. So when will this happen? Now, if you look at it from this chart very clearly, only when this actually happened. You look at it, since 2016 to 2018, all the way they were increasing the global balance sheet, right, from about $17 trillion to all the way about $22 trillion. Then during in 2018, when globally, when they do the tapering together globally, from 22 trillion, they down to 19 trillion. Okay, can take a look. Hey, sorry, not 22, sorry, about 20.5, sorry. 20.5 to 19 trillion, just only 1.5 trillion of the market. The stock market, the Dow Jones, S&P 500, and NASDAQ went down more than 10%. So that's the reason why you can also do a reflective note. That's the reason why since last year, okay, until now, right, with $10 trillion pumping into the market, it's kind of expected that, of course, the stock market will go up. So it's not the economy that's recovering, it's the money that's embedded in the system that's pushing up the stock market. This one is what we need to do. So as long as this curve continue to go higher, it's going to be very difficult for the stock market to come down. So you must remember that. Okay? All right. And of course, you can see that now gold is recovering very nicely. Now, on last Friday, the last week itself, when gold have a flash crash, right? Some trader were asking me, can we buy some gold? I said that as long as you are comfortable to buy and keep, that is fine, but do not go too big. And now we can see that, right, the flash crash has all been taken care of. And now the market is recovering towards what happened for the last, the non-farm payroll. All right. So it seems that, right, the market is able to, gold market is able to come in. Because remember this chart I show you, right, about the inverted real yield. I told you that, right, there is a possibility that this thing will happen. That means that the yield will actually goes higher while the gold also comes up. So what I believe is that, right, it will continue in this manner, whereby this chart will show downside, meaning the inverted real yield will show this movement. That means the yield actually goes up higher, and gold on its own goes up. So I still believe that gold has a possibility to hit 1811 to about 1850 level in the near term. Okay. So this is my belief in gold. All right. Now, of course, if the stock market, because of Taliban, because of the US consumer confidence go down, usually gold will be sacrificed. Okay. Gold will be sacrificed. I'll show you a chart later on during the technical charting point. All right. But the thing is this, if the market felt that, right, maybe it's time to buy some gold to protect the current situation, then of course, gold will likely be going higher while the real yield actually goes up. Okay, at the same time. Okay, so that is what this chart is trying to show you. But remember, this is the real yield inverted, meaning they inverted the real yield opposite direction to show you the relationship between them. Okay, and of course, this is the VIX indicator. I already informed you, if VIX come down to about 15 to 16 level, it will be a good time to look into it. I repeat, if the VIX indicator do come down to about 15 to 16, it will be a good time to look into it. All right. I'm not saying that it will be like, because of the VIX indicator, then after that, the world must get into a shakeout. But apparently it's all right. Every time when the VIX indicator comes down to 15, 16, right, the world will find a way to tell you something will go wrong. Either this problem or that problem. Is it by coincidence? Is it market manipulation? I'll leave it to you to decide. But my personal take is this time around, we should be able to see 19 first easily. But I still believe that by end of this month, we could see as high as 27 to 28. This is my personal take because I'm not comfortable with what will happen in Jackson Hole. And I'll tell you more in the alternate market views because there are some signs that the boys are preparing for the coming Jackson Hole. Okay, so I'll tell you more in a short while. All right, so that's it. That will be all for the first part where all the global news and all the great stuff or why should stay bullish is happening right now. Now, the next thing is this, should we be looking at the alternate market views? So some of you guys who are not that comfortable to listen to alternate market views, I'll give you a very good suggestion right now. You can go out now and make some coffee for yourself, come back at 9:10. Then by the time that happened, I have finished my alternate market views. You can come back to listen to the chart view because some of you do not like to be distracted by the alternate market views. And I observed that it does happen. So I give you now the chance to leave. Okay. All right. Then come back at 9:10 for the technical side. Okay. All right. Let me get some water. We'll start in about 10 seconds time. I'll take a picture, right? Live in. Can take some video from behind. Okay, guys. Now the alternate market views. Now today's alternate market views is kind of interesting, not because that it's some of the downside, but it's a lot of things that you don't see on the mainstream media, and I pick it up for you. So it's about 8 different slides. So let's start out. Now, first of all, this is the U.S. Michigan consumer sentiment. And you notice that the last 6 times out of 7 in the last 40 years, whenever the sentiment crashed this hard, the U.S. in or entering a recession. But the problem is this, we have just so-called came out from the fastest recession ever. Are you telling me that within 2 years, a country can go into recession twice? Well, based on record itself, right, minimally when a country goes into recession, it will be actually for 1 or 2 years. And usually the next recession is about 7 to 10 years later. So the problem is this, with the US consumer confidence as this low right now, because the last time we see something of sort. Okay, can you see this? Whenever we have US consumer confidence going down below 70, okay, all right, the market will go into recession. How do we know recession? You can see this is where the red color area, that's all the recession area. Can you see that? So the problem is this, because last time in 2020, the recession was caused by the pandemic. It was not an economic problem. You understand? So now we are actually really facing potential outright a recession because people are getting worried and people are getting concerned. But of course, usually when this has started, the stock market have already came down. But the problem is the stock market is now at all-time high. So that's the reason why I say as long as the money is able to come in strong enough to hold the market regardless, end of the day, the stock market can still be going up despite we having a recession. Okay, and you can see right now, currently now, right, you can see in terms of we do the last 10 years, we are now at the lowest end ever. So that's why I keep on reminding you that the thing is that the stock market is not reflecting exactly what's happening around the world. And of course, this is what we should be looking forward to. Now, if you talk about the Russell 2000, you can see very clearly now the Russell 2000 seemingly heavily resisted at the 100-day DMA. For the last few weeks, it has been resisted all the way there. And usually when you see this happening itself, right, I will tell my traders this, if the market is at new all-time high, but yet the market is still coming down, most likely we should see some selling pretty soon. And of course, that means retailers have to be very careful. And last but not least, over here itself, you can see that the defensive counters actually now is outperforming the cyclical. That means that traders are getting worried. They're going to go in defensive mode. And that's the reason why there's another reason to express concern. But now we go into the US dollar index. We can see that, right, the dollar index is coming off because now there's actually worried. Because if the US consumer confidence is not there, that means there's no demand for the dollar. And of course, we're going to face this Jackson Hole. Now, everybody did suspect that, right, during Jackson Hole, there could be tapering. But now with the US consumer confidence at this level here and the current problem in Taliban, there is a shift right now that the market may actually want to even consider no tapering at all. So imagine this, if there's no tapering, okay, then likely the stock market will go higher. But the problem is that the market will previously talking about this. The reason why they accept tapering means that the US economy is doing well. So if you're telling people now, I won't taper now, that means you're telling me the economy is not doing that good. And then you're going to put in more money in the system, more QE, the dollar will go down even lower. And then what will happen? Inflation will go through the roof. So now we have a very big problem here. Very big problem because now no matter what Federal Reserve do, is probably entering a checkmate position other than the stock market, which means that they'll continue to do the QE. They'll allow the dollar to slide. Gold price will likely increase. And the worst thing to come is that, okay, people will stay at home to trade. okay, and not going out to work, and the economy will not recover. And because of all this, is how inflation will keep on creeping up. People have lower confidence because not everybody involved in stock market. Then what will happen? It's going to be a very, very big headache. And I foresee that, right, the next 2 months, right, the US Federal Reserve, right, will really have to tread itself very carefully, because whichever side they bet right now, right, it could cause a major problem for them. Do you agree with what I just said? If you agree, please type the word agree. If you disagree, please leave your reason where disagree, why, so we can learn from you. Because at the end of the day is that there's no 100% here. I'm just sharing you whatever I think now, and based on my little 2 cents worth of economic study, I'm informing you that that's how I see it right now. Okay, all right. So I can see that Carl has responded. Lewis has responded too. Okay, now why is that so? Look at this. This is the open interest of the March 2022 expiring 99.5 strike calls on March 2025 euro dollar. In short itself, to make it simple for you, they are expecting the euro dollar to go up. Now think about this. Why would the boys suddenly go into the strike calls? Strike calls, why? Because they expect the dollar to fall. Wait a minute. I thought that the tapering itself, right? If there's tapering, that means the US dollar will be in demand, or at least the reduction of the US dollar. How can the boys be actually betting that? That means that there's only one answer to this. Apparently now, right, in the market, they are saying that they may not even see a taper. They may not even see anything in that. In fact, the open interest bets on NIRP, again, all these things you don't see in the mainstream media, is a negative interest rate policy. Is an unconventional monetary policy tool employed by a central bank whereby nominal target interest rate are set with a negative value below the theoretical lower bound of the 0%. So in short itself, right, they are actually people expecting that Federal Reserve will not hike rate. They may even cut rate. Oh my God. Imagine that if they cut rate, what will happen to the US dollar? What will happen to gold prices? What will happen to the stock market? You will probably see the stock market go through the roof while the gold also going at the same time. And US confidence will drop because, I mean, the dollar will drop. People will have holding a piece of paper that may not really have the same buying power. Oh my goodness, this is going to be a confirmed, guaranteed hyperinflation / stagflation. This is why now traders are showing this. Now, of course, you may say, Cal, maybe these people are just, amateurs and they don't know what's going on. I'm quite sure that none of us retailer bet on NIRP. I'm quite sure none of us will bet on the euro dollar, at least from my perspective, okay? So I don't think these trades are done by amateurs. I mean, there's some reason they're doing this. Now, Cal, could it be just a form of protection and hedge? That is possible. That is actually very possible. So that's the reason why this is kind of interesting right now. And of course, this thing from Taliban itself is really a slap in the face. Really, a real slap in the face. So now we talk about 2 seasonal patterns. But before you go into that itself, please remember this. These are seasonal pattern. And I got it from places that, that are all prominent broking companies. So, make sure that you don't get too, swayed by this, okay? Just trade according to rules, okay? That'll be most important. Now, apparently itself, right, okay, as you can see right now, okay, this is an old chart, this is an old one, because this chart actually shows that the time the chart was showing was back in July 1920. That's today already August. So by right itself, right, today is already August 17th, which is here. All right. And we are nowhere near the market. The market have never came down like this, okay? We are nowhere near that. So that's why even though it's a seasonal pattern, it may not be exact. But again, if the first time doesn't strike, then by theory, the second one may strike. So based on this itself, right, if the seasonal pattern do have a forecasting ability, by right, today or tomorrow, we should see the S&P 500 sliding all the way down to the 26th of August. So whether or not will this happen, will seasonal pattern, will it repeat? We all don't know, but apparently the last time it didn't work, at least from then. So guys, that's why do not just jump into seasonal pattern just because you have bought some software or you follow some trainers and then they tell you this and that. You have to see the whole thing. That is very, very critical and very, very important. Huh? Okay. And of course, this is where it got a bit interesting now. Do you know that, right? 72% of the option traded on an expiration of 2 weeks or lesser, now we are there. That means now more and more traders are very worried. They don't want to take position more than 2 weeks. They rather have it in less than 2 weeks because they are very uncertain of what should happen. And this is the highest level since 2013. So that means I'm trying to tell you that, right, the volatility in the market will shoot up the next 2-3 weeks. I'll repeat myself one more time. That means from today onwards, right, the next 2-3 weeks, volatility will shoot up because a lot of people now are very AG. They rather do a short-term trade than long-term trade. So there will be a lot of buy and sell coming in the market. And if traders, if you need to really be focused and if you want to make some money, then these 2-3 weeks, I will appeal you to be staying on front of screen. Now, if let's say you do not want volatility, you want it to be, if you want it to be like small stable stuff, then maybe the next 2-3 weeks, you just stay out temporarily and don't get involved in the market. Okay. So this is very, very important. Huh? And the last one now will be this final slide. Okay. This is the final slide. Now, remember when I showed this slide 1 week ago, we were somewhere around here. 1 week ago, the chart, we were somewhere around this point here. And if you follow this seasonal pattern now, apparently it tells you that the S&P will have to go a bit higher, right? So it seemingly is really happening. So now it's a new update today. It's the latest update today. And seemingly it's still showing that the S&P 500 will go higher. So you see, so two different sources of seasonal pattern apparently came out 2 different answers. So sometime in life, right, you have to be very careful whatever you read from the internet. Okay, must be very careful. But I cannot deny this, but you put them side by side then by theory itself, right, we should see a turnaround around today. Today or tomorrow, we should actually see a turnaround. And if this is going to continue, it will likely happen until Jackson Hole ends. So apparently now this is kind of getting scary here because now suddenly we have this Taliban coming in and then we have the consumer confidence coming in like this. We have the stock market now not performing or overvalued. So all these things seemingly will weigh down the market. All right. So this is why I say this is going to be pretty scary. Now, whether or not the market will behave like this and drop all the way, I kind of tell you, don't look too much into this. Kind of don't do into this. But at least let's work towards here first. Okay. Let's see the next 10 days. Can we make some money from the market? Then we talk about whether the market will repeat what happened in 1987. Because every time any major peak, they always will do such thing in the market to basically scare off some traders. And usually, right, it may actually cause a very big dent on the trading account. All right. So everybody clear? Remember that. Just concentrate next 10 days will be good enough, right? The remaining thing, just don't bother first, okay? Just don't bother, okay? So I already draw under like this. If you still tell me that you bothered, then I got nothing to say already. Okay, all right. So that will be all for the global news and the fundamentals and all the alternate markets. All right, we're gonna go right now live to the charts right now. Okay, let me just stop my screen. I'm gonna show you my charts now. Let's look at the market. Okay, moment. There we go. Okay, all right, let's look at the charts right now live. Okay, we're doing this live now in Orchard, all right, Orchard area. Okay, let's do some live trading view calls. Okay, all right. Once again, can I have sorry, Susan, can you help me just do a quick 1 minute video while I'm doing this live calls on the market? Okay, now first of all, let's just take a look at what's happening right now. Video. Okay, so what we are seeing right now is that the Dow Jones this morning, there's 3 things to take note of. First of all, we have all-time high traded on last Friday. Then we had to put the MLP in, correct? MLP in, correct? Then we have now a doji formation happening on Friday, which means that today could be a directional day. And as long as the market stays below OP, it could be heading downwards. But remember this, doji directional day doesn't mean that it has to be a directional day. By the end of the day, it could be a double doji. You never know. Number 2, even though now the market is below OP, who knows later on the Federal Reserve may come back in again and they buy up all the way and go to new all-time high. So all these are possibility. So please be very careful on that. Now the MA30 itself today will be somewhere around here, and that's 35,089. So I'm going to tell you upfront, if let's say there's going to be any spillover selling in the market, please take note of this number. The market here at 35,089 could be actually a strong support later. 35,00589 could be a strong support later. So traders kind of take note of that. So let's now look at the China A50 right now. Now China A50 this morning, let's take a look. Okay, China A50 this morning is already trading up. All right, China A50 is actually trading upwards this morning. So China A50 shows and display that it's going against the counter trend right now. If the China A50 stays above the 15,755 mark, we could see the market going up instead. Okay, Kayla. Okay, we could be going up. All right, so China A50 is showing resilient. Now, Hang Seng is going to open up in about 20 seconds time. Now, Hang Seng do have a MA30 over here at about this point. Let me just remove some of the lines, the MLP and stuff like that. It's all cluttered because of the BNB and stuff, but it's around 26,500. All right. Hang Seng will open up in a very few more moments. Let's take a look right now on Hang Seng. Let's bring it all in. Okay, Hang Seng has started trading. Hang Seng has gapped up. Okay, Hang Seng has gapped up. Okay, just to double confirm the pivots. Okay, confirm. All right, the Hang Seng opening price is actually between the two pivot 1 and pivot 2. Between pivot 1 and pivot 2, the KSI reading is green in color. So what does it tell us? Very simple, live right now. We just have to understand that if the market stays above OP, the probability of it going to KTR +1 is very high. I repeat, as long as the Hang Seng stays above KTR, above OP, sorry, it will have a, if you do a CCRY, it will go to KTR +1 rather easily. Now, if the market goes below OP, then first profit to take, if you're shorting, then KTR -1. But when hit -1, I will appeal to you to take back some profit already. Because why? The KSI is green in color. Okay, the KSI is green in color. This is something that you must know. Okay, all right. Just to hijack a little bit, gold price now is trading at 1,781. Now this morning across the board, I already thanks to all the gold traders, whether you are in the SNG group, you're in the 3G group, or you are in the gold challenge group, endgame gold challenge. I already text to you guys that gold this morning is a buy. I hope that you have done what you need to do. All right. And this is how it's happening right now. Okay, I'll talk about gold very shortly. Okay, now Hang Seng is coming down right now. Okay, it's bucking the trend at the moment. You can see right now. Wow, wow, wow! Look at it. The Hang Seng is just coming down so fast. It has break down to below OP and it's already traded a KTR -1 already. Now, of course, undeniable. If let's say there's problem in USA and it's going to be any form of this geopolitical stuff, obviously stock market that is sensitive like Hang Seng, which is a bearish market, will get hit faster. Okay, that's undeniable. And let's look at China A50 right now. It's still moving up. So that means that China is not going to care what happened in USA. In fact, itself, right? If USA got a problem, China will be even happier, technically speaking. All right, so that is what's happening right now. Okay, all right, so we have the Hong Kong and the USA. Let's go back, China and Hong Kong. Let's look at the Dow Jones, okay? So Dow Jones, I already tell you what I foresee the market about what most likely will happen today. Remember the level I mentioned, 35,089. Okay, this is a very, very important level to watch, okay? Now, the weekly chart shows that, well, nothing has changed. The short-term trend line that I have created until now is still very strong. You can see that there's no form of selling at the moment right now. The market seems to be still pretty strong, okay? So no need to worry. So all is good, at least for now. The NASDAQ, now let's take a look. Sorry, I need to do Dow Jones first. Sorry, my bad. Let me do Dow Jones first. Now for Dow Jones this morning, as you can see, Dow Jones this morning, the opening price is already below the pivot 2. Now by right, we all know below OP, below pivot 2 is a sell. But the KSI happened to be green. So which means that below OP happened to be below pivot 2 at the same time. If it goes down, if the KSI is green, do take profit at KTR -1. If not, latest lowest KTR -2, because that is what you have to do because the KSI happened to be green. So if you look at the 15-minute chart right now, you can see that there's some selling in the Dow Jones, a bit of selling. but this market this morning gapped down, then it's now recovering. So if that's the case, if the Dow Jones is to go down, I believe that this will be the first base. It will hit 35,315, and most likely it will stabilize there, and then it may even stage a rebound. So this is something that you must take note of, 35,315. Okay, so take note of that. Okay, so we have the Dow Jones. Let's look at the NASDAQ. Now the NASDAQ, well, is still trying to recover, but we can see how effective is the beauty of the MA30. Can you see this? All right, you can see whenever the market hit the MA30, the market beautifully rebound. Very, very nicely here itself. Thanks, Carl, for the coffee and my pao. Okay, all right. So would that be a chance that the market behave the same way later on? Yes. So everybody, please take note of this number for the NASDAQ. The number for the NASDAQ today is 15,019. Okay, you can see my voice is cracking up. Because 2 days of PTP is killing my voice. Okay, so 15,019 will be the MA30 for today NASDAQ. Okay, now the thing is this: if let's say the Federal Reserve is not going to do any form of tapering because of whatever happening right now, will the NASDAQ be pushed higher? Of course, because back then itself, right, we were speculating that if there is going to be any form of tapering, any form of the US dollar recovering, going higher, the NASDAQ will be affected. Now, on the flip side, if the tapering is not going to happen, and the Federal Reserve say that, you know what, let's just continue QE, then obviously the NASDAQ can go even higher. So this one, you have to understand the long-term and the fundamental and the technical of this. But at least for now, 15,019 is today's technical point to watch out for. Okay. Now, again, I stress, do not look into Taliban, because Taliban thing is always have been happening. So it's just only a slap in the face, but it's not going to create a big problem. All right. Unless, unfortunately, the Taliban soldiers got a bit crazy and they go for some killing of some Americans, and that will create a big problem. If not, it should be fine. Okay. All right. So look at the NASDAQ right now in terms of the TWB chart. Now, the TWB chart shows that the market is still pretty strong, at least for now. For the NASDAQ, the NASDAQ opening price is actually pretty near the pivot 2 level, and the KSI is green in color. So, which means that if the NASDAQ stays above OP today, the NASDAQ can still continue to trade higher, and that's 15,203 level. It is possible. It is very, very possible. And the KSI is green. But of course, the opening price is very near to the pivot 2. And if the market really, really breaks below pivot 2, by right, below OP and pivot 2 is a sell. But because the KSI is green, I would suspect that you just make sure you take back profit at KTR -1. Okay. Now that means that as a trader, you need to prepare your buy side and prepare your sell side. All right. It's no point being fixated to a view, because sometimes the market can go beyond than you can imagine. So that's the reason why you need to consider the upside view and the downside view for the NASDAQ. S&P 500. Now, S&P 500 had created a new all-time high on last Friday. And I already tell you that this is what's actually happening right now. So let's look at the MLP for it today. The MLP for S&P 500 is about 44.64 level, which interestingly is a day high of today. Quite interesting. Okay. And the MA30 is about 44.13. So I kind of say upfront, if there's going to be any form of selling, and if the S&P do come down to 44.13, two things to do. Number one, for those who short S&P, I will kindly advise you to take profit at 44.13. For those who want to buy S&P, can I appeal that you wait around 44.13 to buy? Because the last time we see something that the market did was that whenever it trigger or go very near to the MA30, usually that is where the S&P will stage a rebound. So at the moment now it's 44.59. All right, we're still a bit of distance from 44.13. But again, I will stress this, that if the S&P 500 do drop down near to 44.13 or even trigger 44.13, it may not be a time to sell. It could be a good time to buy. Okay. All right. Are we clear with that? So today, the one that I'm looking at is S&P 4413 is the today's MA30 level. Okay, I'm going to put it in right now into the our chat group here. Okay, all clear? 4413. Okay, so now let's look back to the TWB chart for the S&P 500. Okay, for S&P 500, you can see that everything looks good. It's above the pivot 1, it's above pivot 2, and the KSI is green. So at the moment now, doesn't seem to have any problem here. All seems to be still okay. All right, so traders, I can just wait for a while. Okay, there's no reason to express concern for time being. Okay, all right, so that's S&P 500. Let's look at the China A50 again. China A50 now has retraced off the highs. It has retraced off the highs. I cannot make the chart bigger. It's limited of this area, but it shows me that the market is having resistance at the MA30. So that's why the MA30 is a very powerful indicator. And then, of course, we look at the Hong Kong right now. Hong Kong has recovered off the low. Hong Kong has recovered off the low. So it's going to be a pretty interesting sideways market today. All right, then let's just look at the Nikkei. All right, let's look at Nikkei. Now, Nikkei, this morning, we saw Nikkei going down further. And I already told you on Friday that Nikkei will likely be coming down. Why? Because it has basically failed to trade higher. And of course, if it loses the MA30, it will go down. And you can see beautifully today, the MA30 level. You can see that the MA30 level for today is somewhere around here. And that's about 27,847. And you can see beautifully when the Nikkei touches MA30, it couldn't stay up. It reversed downwards, and that's a sell. Now, of course, you may say, Cal, but the dollar has came down. That means that the dollar came down, the yen will go up, right? Exactly. Yeah, that is the reason why the Nikkei fell. Because if the dollar is to come down, the yen will go up, and the Japanese market, Nikkei, doesn't want a strong yen. So that is the reason why today Nikkei is coming down, because the Nikkei doesn't want a strong yen. So the problem now comes in. If let's say, if the dollar continues to slide down, not only commodity prices are going to go up, the yen will also go up. And if the yen goes up, right, okay, the Nikkei will suffer further. Can I understand this? That's the reason why itself, right, when I mentioned to you Nikkei, it is good to consider to short. And of course, not only is MA30, if you look at our traditional chart, which is the TWB chart, you can see the reason. Can you see today? Today is a very powerful reason. This morning itself, right, when someone texted me early about 7 a.m., a student asked me, say, Cal, can we short Nikkei? I say that, where's the OP? She says, here. I say, then, if the market breaks below P2, is it a sell? Below OP, below P2, is it a sell on the Nikkei? She said, yes, but Cal, the KSI is green. Can we short? Well, I repeat to you many times. We will trade based on techniques, but we'll use the KSI indicator as a form of guidance in terms of our lot size and our expectation of TP. So by right itself, right, the Nikkei based on below OP, below P2 is a sell, but because the KSI is green, we should take profit between KTR -1 to the most -2. So this was what exactly I said to her. All right, and let's take a look at the Nikkei right now. Now, this is a Nikkei, as you can see this morning. The Nikkei opens at this area, then immediately it went down below the pivot 2, and look at it, it triggered the KTR -1 and -2 very nicely. All right, of course, now Nikkei has went down below KTR -3, but the point is this, if you have shorted the Nikkei, you should consider the buyback at KTR -1 and -2. And there's the reason why you understand now when the market breaks below P2 and OP, please don't fight with the market. The market will likely come down. And it's all this information are already prepared, written, carved in stone in our TWB manual. And it can work in anywhere in the world as long as you believe in the system. So got it? Pretty cool, right? So this is all the things that you need to know as a trader so that you can get the best of it. All right, so we have the Nikkei also done. Let's look at DAX. Now, DAX has created a new all-time high again. Now, why did DAX continue to go higher? I show you right. The amount of funds available in Europe is really incredible. All right, amount of funds in Europe is really incredible. Then in terms of technical, well, we can see very clearly the market is so far away from MA30, so the bullishness is definitely there. And of course, if you look at the chart on Friday on the DAX, let's just bring it into you. Okay, on Friday, the DAX was no-brainer. As long as the market stays above OP, CCRY will be a buy, right? Because the KSI is green and it's between two pivot. But of course, you need trigger. You will need to have a trigger. So let's see, is there any trigger on the Friday's market? Now, DAX, we use M5 because DAX is a pretty fast market. So we use M5. So let's see what happened. All right, we can see that, okay, there is a very, very incredible BNB right here. Can you see this? There's a BNB and it happened to be a CCRY. So by right itself, right, CCRY above OP and a BNB as part of nucleus. So it was a trigger at that moment. And of course, we know that the likely upside will be at least KTR +1. And indeed, it really happened. So all these things itself can be already predetermined once you enter the market and you know what to do. All these are there available. All right, so that's why if you have belief in what you know, you would have bought this DAX and have profited from here itself. Okay, all right, so that is the DAX market, and I covered for you Nikkei and all those things. Okay, so now let's look at the thing that everybody's concerned on. Gold. Okay, gold. Now, let me ask you guys now, there are 64 of you online right now. How many of you have bought gold this morning? How many of you have bought gold this morning? Let me see now. If you have bought gold, please key the word bought. B-O-T, or short form, or B-O-U-G-H-T. Okay. All right. Let me see how many of you have bought gold this morning. Okay. We have Chong Meng, Cheng Kui, Anthony, David, King Hua, Bernard, Eileen, Jason, Eric. Wow, so many of y'all have bought gold. How about the rest? There's 66 of us here right now. Okay, Judy, short form B. Judy, if you're driving, careful, huh? Okay, all right. Okay, so not too sure how many will be buying gold, but definitely for sure, I have already told you this morning I'll be buying some gold. All right, and then also we also mentioned that what are the reasons I already expressed to different group chats. So for those in different group chats, please look at it. Okay, now why we buy gold? First of all, we must understand that I share this. Now I have done a little recording yesterday with a group of traders, gold traders who were in a gold challenge, to explain to them why they have lost money on gold on last Friday using Fibonacci. And if you believe in Fibonacci, if you're a believer in Fibonacci, then I must tell you this. The Fibonacci now 50% mark, in my opinion, is 1762. And you can see on Friday, the market closed above 1762. So by default, if this will continue, then likely gold will have to go all the way up to the next Fibonacci level. And that number is not small, it's 1836. It's 1836. Now, there's two resistance that the gold has to go past to reach 1836. The first resistance is the MA30. Now, MA30 for today, this particular figure is 1787. 1787, which means that gold has to cross 1787 before we can talk about any higher level. Now, when we say cross, that means the closing price must be above it. Okay? The next level that we need to concern for is the MA200. Now, the MA200 level is 1805, which incidentally is actually one of our KCB level. All right, 1804. Sorry, 1804. Sorry, my bad. Okay, so we have three numbers right now: 1787, 1804, and 1836. Okay, these are the three numbers to watch out for today. Now, for those who are in gold, I would like to stress this again and again and again and again. Now, you must understand this. When there's going to be any equity sell-off, gold usually get sacrificed. Okay? Now, let me explain to you in a very slow manner way. All right? Let's take a look, everybody. Because I don't want you guys to just, go in without even knowing the downside risk. Okay? So let me explain to you in a very simple way on how it works here. Okay? Now, this is the US Dow Jones chart. Okay? Now, this is using the all-time high to denote, okay, the US momentum. Now, you can see that, okay, back then, when the US market came down on the June the 7th, when the Dow Jones was here, when the market came down all the way to June the 18th, the Dow Jones came down about 5%. About 5%. Okay? And I kind of suspect that we may see a 5% drop. May in the Dow Jones. So which means that if you look into this as a kind of retrospect, right, you will notice that back in June the 7th to June the 18th, when the Dow Jones dropped by 5%, if you remember this date and we put it beside gold, now let me bring it beside gold. Okay. All right. Okay. Okay, remember I told you, right? Can you see this? June the 7th to June the 18th, you have noticed that when the Dow Jones was down, the gold market also went down from a high to the low, all right, down 135 US dollars. I repeat, in just 9 trading days, the gold market dropped by 135 US dollars. Okay? And interestingly, at that time, we did saw a CCRY in the day chart, which interestingly is actually happening right now. At the same time, during the same period of time, the KSI was red. Same here. At the same time back then, there was no blue bars. Same here. So now we have a bit of problem here, because if you look carefully in this chart right now, and I move to you one interesting chart, which is probably you guys have realized, I have this thing called the Kfc chart, right? Okay, if I put a gold into the Kfc chart, you will notice that tomorrow is a Kfc day. Tomorrow is a Kfc day. Now, the last time we have a Kfc movement on the gold, we noticed that that was where the market basically bottomed out and gold went all the way up. So will we be seeing this again on tomorrow's market? We won't know, because we need to have the Kfc day completed. Then we will know where is the technical point to watch out for. But that means that likely saying that gold will have big movement tomorrow onwards. Now, this is getting scary, because if I say that the gold will have big movement onwards, and if the equity market is to come down, example, if it does happen, then the possibility of this happening, repeating, then of course gold may be sacrificed. And that's the reason why now I'm asking all of you who have bought gold, right, to let me know, see how many of you have bought gold, and then to watch your gold position. So please make sure that you know your risk level, do your risk management, you know how much you can risk, everything must be in place. Because now we are in a very interesting position whereby gold and equity market now seemingly has similarities in certain areas. Okay. Now, of course, if let's say the Dow Jones doesn't go down by 5% and in fact recover, what will happen? Oh, then gold will go much higher. I repeat, if let's say that later on if the Dow Jones recover and go to new all-time high, gold will go much higher. So that is a pro and con of trading gold or investing in gold today. All right, if everybody clear? Is everybody clear? If yes, put the word clear right now, C-L-E-A-R, all right? because I want you to know exactly what could happen. And apparently it's all right, whether market go in cyclical, is it market manipulation, all this is all right, seemingly happen with a seasonal pattern. And of course, if you saw my MAO earlier, the alternate market views, we also saw the seasonal pattern for S&P 500, and it's seemingly starting tomorrow. So of course, straight away, some people are asking, Kel, then the KFC for S&P, how is it? If you look at it, that's now I show you, right? Hold on, where is it? Right, for the S&P KFC, right, you notice that I don't have. I haven't had the time to really sit down to do it, so I don't have. But I can tell you the Dow Jones KFC. The Dow Jones KFC is so far away, so you don't need to worry about that. The NASDAQ KFC is still there. This one I can tell you something here. Do you notice that the KFC point is actually around this area here, and the NASDAQ is trying itself to stay above the KFC point. The KFC point for the NASDAQ is 15147. I'll write down for you, okay? 15147. So in short, if the NASDAQ cannot stay above 15147, the NASDAQ technically should be going down. If the NASDAQ can stay above 15147, the NASDAQ should be going up. Okay, so you can see a very precise number given to you. And of course, you can see the market seemingly also reading it at the same time. Very interesting phenomenon. Then the last one, the KFC is available, is Hang Seng. Now, this is Hang Seng KFC. Can you see right now? Beautiful. Look at it. When Hang Seng KFC was created back then on the 29th of June, the number was 29,247. And you remember what I told you, right? Above KFC is a buy, below KFC is a sell. So is this going to happen? Is this a good way to inform yourself that what will happen to gold tomorrow or whatever? You can see this as a form of example. That's the reason why I say that the KFC apparently has a very unique way to tell you the turning point or the flip point of the market. Turning point is obviously going different direction. Flip point could be actually the same direction and continuing it after a jump. So that's the reason why I say that traders, something is going to be interesting for gold from tomorrow onwards. Because we know that gold actually is a bit of hedging tool for a lot of traders. So if let's say now tomorrow is a flip day and gold go into big movement, which means that if gold really come down for whatever happened reason now, because now the problem is this, the dollar now is actually weak, right? So likely gold should go up. But if gold can come down instead, that means that the equity market is in trouble. So this is my point here. That's why the next 2-3 days, traders must really be watching the market very closely. Okay, got the idea now? All right. So with that understanding here, I can go back again to the gold chart to just finalize what I need to share with you for today's gold. Okay, so gold, today we have already to the levels to watch out for, all the different levels. All right. Then the weekly chart, very clearly, we have gold touching the 61.8 and rebounded. So it's kind of positive at the moment. And for today's gold trading, and let's just refresh the chart one more time. Okay, yesterday, during one of my sharing session, right, with students, even on Sunday, I say that we will see pivot, right? Confirm got pivot. Okay, so that's why I'm the creator of the pivot, so I will know whether have pivot, no pivot. Don't worry about that. Number two itself, right? I told you the opening price will be very near the pivot point, and indeed it is showing. So now by right, if the market goes above pivot 1, CCRY above pivot 1 is a buy. But because the KSI is red, then the upside potential will be between +1 to the most +2 only. This is something that you must take note of. Now, if you are buying gold on a CCRY positioning of the day chart setup, then of course you can buy, but stop loss has to play somewhere around here. Now, of course, some people will say the Cal is too far away and not comfortable. Fair enough. No one is forcing you to enter based on this, but you just remember how much money you can risk, divide by the range, multiply by the value. So which means that this money is the money that you can afford to lose. So whether it's 100 or 300 or 500 is about yourself. It's not that, wow, the range is so big, that means I'm going to lose a lot of money. Now, that is a very wrong way to interpret. Okay, our way of risk management is very professional. We only lose the money that we can allow ourselves to lose, unless you don't put stop loss. Now, the upside could be as high as 1804 or 1811. Now, I would suggest that if you are buying gold, can I suggest you to consider to put at 1811 first? Okay, if you are buying gold to keep, then you consider to put at 1811. And if the price go higher, if you ever hit 1804, take partial profit. Then after that, aim the rest at 1811. Now that is on the pretext that the gold going to go up, on the footnote that gold go up, okay? All right, so that is what I see on gold today. Okay, all right, so look at silver. Now silver, Friday recovered strongly because gold also went up, right? But silver in terms of Fibonacci, if you want to go to Fibonacci level, is still kind of below the 61.8. So because of that itself, right, that means the market is still kind of weak compared to gold. But of course, again, if you're buying silver to keep for speculating reason, then of course buying silver right now is fine. I already mentioned that 24 can buy some, $23 can buy a bit more, $22 buy a bit more than usual. So now if silver can come back to 22 level, it'd be great. If now at silver at 23.70 is neither here or there, then of course in terms of speculation, I will not be doing it. Okay, so that is silver for you. Now for silver day chart, let's take a look. Silver day chart. Oops, my silver is not up yet. See? My silver not up yet. Uncle Ben forgot. Okay, so I can't do it for you now. Okay, never mind, skip. Now look at crude oil. Now this is crude oil. Hey, Cal, how come US Taliban got problem? How come the crude oil going down? That is my real concern. Now, usually when we have this type of thing in Taliban itself, right, usually we see crude oil price going up. How come the crude oil price doesn't go up? Why is it not reacting? Because the market now is looking at another thing. The market is not concerned about what's happening in Taliban. They are very concerned now is the whole world economy. And this is the main gist of it. Now, moving forward, this coming in 2 weeks, in about 1 week's time, there will be the Jackson Hole, right? All the central banks around the whole world will be coming together, congregating together, and then they will talk about what their view in the market. Now, this is going to be a very dangerous position because whatever they choose next is right, it's going to give a big problem. And the way that crude oil price from $76 from this point, $76 down, from $76 drop down to $74 to $73, you notice that it's actually lowering down. And despite White House, remember this, this is something very important. This is the reason why that day the crude oil was supposed to go down, but the White House came in and say that the OPEC members has to increase the price. But interestingly, the price reacted for that day. But the next 2 days now, we are seeing that despite even today, the Taliban thingy, the crude oil is coming down. So seemingly, it shows that some people is losing the authority and people are not that comfortable with whatever your request is. And if that's going to continue, right, this is actually a very clear sign that the world economy may not be really as rosy as it is. But of course, again, I want to tell you this is all fundamental and my personal sharing. If not itself, right, technical, just put your MA30 and MA200 and stand by. Now for the MA30 today is 69.65. So which means that as long as crude oil doesn't break 69.65, I'm not that comfortable to buy crude oil. All right, not comfortable. All right. Then for the MA200, you had to watch already. The MA200 is 65.38. 65.38. And of course, if you look at it, the last time we almost had that very nice buy, and that is where the crude oil recovered. So 65.38 level will be the level that I will believe that will be the first support the market will do. Because if you look across under time, you notice that the last time when we saw a support on the MA200, in fact, there were 3 strong support back in 2020, September to November period. And every time when the market touches the MA200, the market will strongly rebound. So if anybody would like to trade the crude oil, can I suggest to you, watch out for this price for today, $64.90, at least for today lah. All right, so that Cal, $67 right now is like $3 away. Yeah, I know, I understand. I'm just giving you what is happening today. So you can track this throughout the next few days. If the crude oil price do come down to the MA 200 level, consider to look for buy opportunity. Okay, 64.90. Now, what if happen if the crude oil goes below 64.90? Then we have a problem. If the crude oil goes down below MA 200, if you look back into again last time, the last time we were here, actually, look carefully, we were here. The last time when crude oil went below MA 30, right, MA 200 was about 57.22 level. That was in year 2020, about 1 year ago. And of course, when the market loses the MA 200, oh, that was catastrophe. Remember that? The crude oil plunged all the way down to negative. Remember what causes that to happen? It was the start of the pandemic. And of course, other than that itself, some of the crude oil related counters, all right, some very prominent, one pretty prominent company in Singapore got into serious trouble, and that was where it causes the crude oil to collapse. And if you remember that when the crude oil collapsed, that means that because there's no demand for the economy, then that was what happened. So if you look back again now, why would US White House suddenly out of nowhere wants the OPEC member to increase crude oil prices, right? Then you can see that something is actually creeping in already. So all I can say is this, the MA 200 will be very essential and critical for the global market outlook. If the market stays below the MA 200, then be very careful. This may actually be one of the catalysts or one of the key reasons for you to take note that the market may pull. But if the market stays above the MA 200, then you're all safe. Are we clear with this? If you're clear with this, please key Crude, C-R-U-D-E. So these are all the key highlights of the day that you must remember. When I ask you to key something, it's starting to remember this, remember that. So at least you have forgotten whatever I say. You know that you key Crude, you know that, okay, Cal did about Crude, then you can reflect and refresh your memory. Okay, got the idea. Now, someone asked me on the site now, Cal, will crude oil actually go down to below $10 again? Let me ask you a question now. Many years ago, when crude oil was at $60, I did say crude oil may go back to $30. And every one of you say you will buy crude oil if ever the crude oil go to $30. Then when it hit $30, right, what did you do? You did nothing. Right? And the worst part is this, at $10, you want to short crude. All right, yes, indeed. But of course, if you shorted crude at $10, it went to negative, you make a lot of money. But the problem is that at the time when the crude went negative, it was because of expiration and because some of the people was holding a very big position, there was no place to hold or house the crude oil. I mean, that is 100,000 barrel, no? Put at home, cannot be, right? So that's the reason why, because it was pandemic period, that's why crude oil came down to that crazy level. And we've never seen a commodity go down to a negative, never been seen before. That was the first time. So do you think that crude will go to $10? I don't think so. But you tell me that if the economy is really not doing that well and globally the market pull back and then plus potential hyperinflation, then for crude oil to come down, it is possible. So not too sure how you see it. Some people see up, some people see down. Now to me, I'm much simpler. I see the MA 200 for final decision. Okay? All right, so that is the MA for the conventional. But for today, to make it simple, today the KSI shows me is red bar. And I don't like this chart. I told you before on the crude oil because this is a higher low formation. For those of PTP train, you remember this. And I told you the KSI is red in color. When the market is higher low formation in the downtrend some more, once the market breaks, usually the market will sell. And this is something that you learned in PTP. And I remember that. I know that you will know what to do. Okay, so that is what I'm seeing for today. So for crude oil today, I kind of suspect that today they will go down to $66.86 because we can see the KSI is red and it's not coming down. So 66.86 should be the level to watch. Current price now is 67.28. Okay. All right. So basically I have covered everything right here now on all the market. And I also have completed today's MAO perfectly. My connection just dropped. Okay, so I have done everything that I need to share with you for today. All right. So I wish you all the best for trading. And remember that don't read too much into this seasonal pattern. Remember, trade with rules, it should be fine. But definitely this week itself to next week, we should see very big volatile market. All right, that'll be all for today, MAO. Have a great day. This is Cal signing off. Bye-bye.